Welcome back to Atlanta Car Accident Attorneys with Ted Spaulding. I'm Abby, sitting down with Ted Spaulding of Spaulding Injury Law in Atlanta, Georgia. Ted, glad to have you back. On today's episode, we are answering the question that throws people after an Uber or Lyft wreck. Who actually pays, and why does the insurance change 3 times during a single ride? We are walking through what makes a rideshare wreck different, the 3 coverage periods, and the $1 million policy gap, who you can actually sue, how Georgia splits the fault, the app evidence that decides the case, and the deadline that does not move. So, getting into question one, somebody rear ended by an Uber or Peachtree figures a wreck is a wreck and files it like any regular fender bender. What makes a rideshare wreck here in Atlanta different from a regular car accident?
The main reason it's different, and there's a couple of smaller ones, but the big one that I want the audience to know is it's insurance. So thank God Georgia stepped in because of the issues that were being created with this new platform of having rideshare companies. It was the Wild West for a while when it came to, does Uber, Lyft have insurance and how does it apply? So Georgia stepped in 2024, created a statute, and it's called the Georgia TNC insurance statute. So TNC stands for Transportation Network Company. So that would be an Uber or Lyft. And I think there's a few small ones that have now started too. It would cover all that. And it's requiring them to have insurance. But the trick that nobody understands and that the statute lays out is it's different coverages depending on what period of time exists. And so what's important for people to know is, what do you mean, what period of time? It is when the driver is or isn't using the app. So the Uber app, the Lyft app, or if it's one of these smaller companies, do they have it on? Are they in process of agreeing to take a ride? Are they going to pick them up? That sort of thing. Or are they in between rides, don't have the app on? So it's not really complicated, but it's a system that nobody understands and knows. And it tells you how insurance layers in. And the problem for folks is, depending on when the app is being used and how it's being used, it can be as low as $50,000 of coverage, which nowadays is not much coverage at all. You can imagine going in the emergency room alone, you're going to be hitting tens of thousands of dollars potentially, up to $1 million of coverage. So there's this massive $50,000 to $1 million gap, depending on the facts of the case with the use of the Uber or Lyft app. And so we got to get in there and deal with it. And quite frankly, it's why I always recommend to people, and folks who have called me before with cases will know, I don't always tell people they need an attorney right away. But in Uber Lyft cases, the few others that are out there, I tell people you always need an attorney, because for no other reason, you got to be able to work through what insurance applies. And because these cases are all about insurance, that's a massive issue. And you're talking the difference between 50,000 and $1 million potentially of coverage. You don't want to make a mistake.
So let's picture a passenger holding 3 cards after a crash: the drivers, Ubers, and their own insurers, with no idea who to call. Who actually pays after an Uber or Lyft accident? The driver, the company, or your own insurer?
The short answer and the hopeful answer is all three. It is very rare, and I'll walk through how it works and why it's rare it's all three, but it could be. So first and foremost is your typical situation, the at-fault driver's insurance. That is one potential area of insurance, and it could be the first one. So you have to reach out, as usual, to the at-fault party's individual insurance. So we're not talking Uber, Lyft. We're talking their personal insurance on their auto. Now, after that, it's obviously Uber, Lyft for liability coverage. That would be the potential second layer. And then third is what you always have, whether it's Uber, Lyft or not, which is insurance, which is your own insurance. Do you have uninsured or underinsured motorist coverage that could supplant what there is in liability coverage? So you have to work through all those layers. And here's why it's important. Not what I just said earlier about the Uber, Lyft itself, its insurance and how much, but that first layer, which is the driver's insurance. because what you learn when you read the Georgia statute, so that TNC statute we talked about, is Uber Lyft doesn't have to give insurance. They don't have to have insurance. What they have to do is make sure there is coverage. So it's coverage either from the driver's personal policy or the Uber Lyft. Now, what we know from practice is Uber or Lyft always has that insurance. So they've chosen to always make sure they have it and not rely on what the driver has. Here's where it gets complicated. The driver policy most of the time does not apply. Why? Because what a Uber Lyft driver is supposed to do is reach out to their individual insurance policy and tell them, hey, look, I'm going to be using my personal vehicle to drive for Uber Lyft. Would you please put an endorsement on my policy where my policy still covers me, even though I'm using it for a business purpose? Why? Because all of our policies, yours right now for your vehicle, will not cover you if you're driving for Uber Lyft without calling and getting that endorsement. So as you can imagine, most people don't know to do it or don't want to do it because it probably costs a little extra. So most of the time we're finding in these cases, the individual driver's insurance does not cover. They deny coverage because they did not get that endorsement, and therefore they get to say, hey, you didn't tell us you were going to be driving for Uber Lyft, so we're not covered. And that is legal. So that's why I said, to answer your question, we hope it's all three. The Uber Lyft driver did the right thing. They've got their insurance covered. We also have Uber Lyft. So we got two liability policies. And then we also have that on your side, providing yet a third layer of coverage.
So, if word gets around that there is a $1 million policy floating out there, and then a guy who broke his wrist in the back of a Lyft might want to know if it's his to claim. So, what is the $1 million insurance policy on a rideshare, and when does it actually apply?
Yeah, so this is where we're getting into the analysis with the facts and the insurance coverage to see if that $1 million applies. When does it apply? It applies in what we like to call period 2. Okay. There's really 2 periods where the statute kicks in and there needs to be at least the 50,000 of coverage. Period 2 is the $1 million. That is when the Uber or Lyft driver has the app on and has selected a ride to go pick up. From that point all the way through the dropping off of the person at their destination, period 2 applies, and the $1 million of coverage kicks in, not the 50,000. The 50,000 kicks in, not the $1 million, when the Uber driver or the Lyft driver is just waiting, has the app on, but is waiting to select a ride. So they have not engaged yet saying, yes, I will go pick up that person and drive them. So they have it on, they're waiting, they're looking through, in essence, I want to get another ride, I have the app on. That is only 50,000 of coverage. So again, this is where a big fact analysis has to come in with evidence and everything else of which of the 2 situations do we have at the time for this individual where he's in the vehicle and gets his wrist broken. That one's easy, right? He's in the Uber Lyft. He clearly means he's going somewhere. He has been picked up. So he should be in period 2. The $1 million would apply for that gentleman.
Every rideshare article throws around period 1, period 2, and period 3, like everyone was born knowing it. And a mom trying to sort out her son's claim might be completely lost. So I know you just mentioned it, but can you walk us through period 1, 2, and 3 in rideshare insurance?
Yes, absolutely. Because period 1 is the biggest concern. And then obviously we have the next 2 periods. So what is period 1? Period 1 is when there's no coverage under the TNC statute at all. Because remember, it's only the second and third periods where they apply. Okay. So period 1 really would be when there's no coverage. So period 1 is the Uber Lyft driver has turned off the app. So that's what I consider period 1, which means there's no coverage. So we had a case once where the Uber Lyft driver, I think it was Uber, dropped off the person that he had already selected to do. So it was within that kind of period 2, period 3 time frame where the $1 million applies, drops that person off. And instead of keeping the app on to get another ride, he chose to turn it off, started driving around, wasn't looking for another ride, gets in a wreck. Then for some reason, after he's done with the wreck, he turns the app back on because he wants to keep driving for the rest of that day. So we had to get in and figure that out. And turns out at the time of the wreck, he didn't have the app on. So there's no coverage. So first it's that no coverage situation. Then it's the next period is really the period 2, which is app on. So they're actively looking for work, looking for someone to pick up, but they have not chosen a ride yet. That is the 50,000 layer minimum coverage. And again, they could have more, but normally, as you can imagine, why would they pay for more for that period? It's going to be that 50,000. So you only have 50,000 of coverage through Uber Lyft. And then you got the last period, which is the one we hope it's always in, which is they selected the ride at a minimum. They're on their way to pick the person up, or they have the person in the vehicle, like the wrist injury one we were talking about, and they haven't dropped them off and finished the ride yet. That's the period where you get the max insurance coverage of that $1 million.
So let's say a driver was logged into the app and waiting for a ping, empty backseat when he blew through a light and hit a woman heading home from work. What is the coverage gap when the driver has the app on but hasn't accepted a ride?
So that's your period 2 situation. That is where that massive gap occurs. It's 50,000 instead of $1 million. So what we want to do, because that is a ton of money, massive gap, we want to make sure at the exact time of the wreck, that's really the case, that he hadn't hit that button yet. Because as you can imagine, that's an interesting scenario, because how do you prove it, right? Okay, especially we've had some scenarios where it's like literally right before he hits the button and he gets in a wreck. I had one where right as he's about to get in a wreck, and it's probably why it happened, separate violation we could talk about, he's literally going to hit it and boom, gets in a wreck. Now we're talking split seconds of, because then he hit it after, because he didn't want to lose that job, thinking, oh, I'll get through the wreck situation with cops and everything, and I'll go get this person. So he still selected it, strangely enough. So we had this whole deep dive issue into the facts of, gosh, he had the app on, he hadn't hit the button yet, and it's 50,000, or is it he hit the button and then boom, and it's $1 million. So you're talking that split second difference, almost $1 million gap in coverage. Turns out in that one, they were right. And it literally was a split second before he hit the button that the wreck actually occurred. So we had to dive in for months and months, because we don't want to just let that go. And then ultimately had to tell the client, yeah, they end up being right. We've got it proven. It's 50,000 in coverage, not $1 million.
So the whole coverage stack comes down to what the app was doing at the moment of impact, from the thin period 1 floor to the full $1 million policy. Now that we know which policy is even on the hook, the next fight is who you can actually hold responsible, the driver, the company, or both. One man who got hurt cares less about the driver and more about making the billion-dollar company answer for it. Can you sue Uber or Lyft directly, or only the driver?
The hopeful answer is yes, you can sue both. 9 times out of 10, you can't. The reason why is because Uber Lyft typically enjoys independent contractor status with their drivers. So what that means in Georgia, Georgia has vicarious liability laws, which means employers are liable, meaning they can be a named defendant when their employee hurts somebody. Uber Lyft, normally that's not the scenario. So you can't name Uber and Lyft in the actual lawsuit. But we don't want to assume those things, right? Because there are certain situations where someone's doing this full time and they would be considered an employee. So we want to look into the facts and find out. But people need to know going into it, and we always advise it to each individual client that we handle with an Uber Lyft case, is look, we're going to see what the facts are, but just realize most likely we're not going to be able to name Uber Lyft directly. Now, what other people need to know is that still means their insurance applies regardless of whether they're a named defendant or not. So if they've got the insurance, like we talked about before, different layers, whichever one it is, their insurance is still going to apply, even if it ends up it's just you versus the at fault driver as the defendant in the case. So you're not out of luck in the sense that you're not going to have their insurance involved. It's just always nice. And I think I've talked about this in prior podcasts about commercial vehicles. It's always great from a trial strategy to have someone like an Uber Lyft as a named defendant. Brings extra value to the case because the jury knows that you got this billion-dollar company involved. But again, even if you don't, doesn't mean you don't have their insurance ultimately.
So let's say you're stopped at a light in Midtown in your own car and a Lyft driver plows into you. And now you have no idea whose policy is even involved. What if you were hit by a rideshare driver while you were in your own car?
We're going back to that first question, which is all the different layers and stacking and hoping that we have at least 3 different insurance policies, right? Because we're talking the Uber Lyft driver is the at-fault driver. So you've got their personal policy, that driver's personal policy. Does it apply? Most likely doesn't. Then you got Uber Lyft. Again, does it apply? Factually, we got to go through all those scenarios. Was he using the app? What stage? And then third layer is your policy.
The adjuster might have already told a woman that she was partly at fault, and she could be convinced that one phrase killed her whole case. So, how is fault decided in a rideshare crash, and what does Georgia's appointment rule do to it?
Yeah, so this is where an Uber Lyft case is no different than any other, right? When we're talking fault, it's a standard car wreck case. So fault, very simple. Is the Uber Lyft driver at fault or are they not? And to what extent? So to kind of get to your question, you're talking comparative negligence. So we're a comparative negligence state. What does that mean? That means both the Uber Lyft driver could be at fault, you could be partially at fault, and you still can recover. Or it could mean that's the scenario, but you have too much of the fault, and so you don't recover at all. So how does that work? So if the determination has been made, yeah, you probably share some responsibility for the wreck. It now depends on what percentage do we think a jury's going to put on you. If the jury is going to put 50% fault on you, the plaintiff, or higher, then you get 0. If it's 49% all the way down to 0 on you, the plaintiff, then you recover. You recover minus the percentage they put on you. So if they put 5%, it's jury verdict minus 5% because you were found 5% at fault. So that's the comparative negligence scenario. And that's why we tell people in this facts situation where the adjuster's saying, look, we're not going to pay out anything because we think you're at fault. That's not the end of the story, because is it you're 50% or more at fault? Or is it just that you share some, but not all, and not at least 50%? So you want to still reach out to an attorney because you still might have a viable claim, quite a significant viable claim. I mean, we've had Uber Lyft cases, because remember, if you get the $1 million of coverage and you're significantly injured, 5%, 10% put on you is not really going to move the needle so much that it's not worth pursuing. You could still have a $500,000-$600,000 case, even with 5-10% put on you of fault for the wreck.
So shared fault sounds like lawyer talk until you translate it into the actual dollars a person walks away with, which is exactly what this next one does. What does Georgia's modified comparative negligence rule mean for your recovery?
So the best case scenario with comparative negligence would be that it just means your judgment, your verdict, and therefore the potential for settlement is just reduced some. So remember, if there is no comparative negligence, meaning you did nothing at all wrong, and the Uber Lyft driver is 100% at fault, you have nothing to worry about. You have the right to the full max recovery, the verdict that the jury gives you. Now, if you do have fault, the hope is it's below 50%, because then Georgia law says you're still allowed to recover something. And then it's the full amount of the verdict minus what percentage fault's placed on you below 50%. So obviously in that scenario, the worst case would be jury finds 49% fault on you. 51% on the at-fault party. So then they give a verdict, and then it's minus that 49%. Okay. So you can imagine in these bigger cases, you could have typically, we're not looking at 49% type things. Most of the ones that we have taken where there's comparative negligence, they got a little bit of an argument. The plaintiff could have done something to either avoid the wreck, may have been speeding or something that contributed it to the wreck. And a jury puts 5, 10%, 20%, I think is the most I've ever had a jury hit the plaintiff on fault. And so you're just reducing the verdict by that amount. So you could be talking 5%, 20% on a $2 million verdict. So yes, it's not the best case scenario. We want 100% fault on the defendant, but you're still talking a very significant verdict that just gets reduced by $100,000, $200,000 in your several $1 million verdict type case. So that's why I always tell people again, just because there might have been something you could have done, the adjuster's making this argument, oh, we think you're at fault. Don't just take that to mean I have no recovery at all. You've got to get with a lawyer to make sure there's not something that still can be pursued, because you'd be giving up significant rights, just assuming the adjuster means I'm 100% at fault or I'm 50% or more at least at fault, so I'm not going to pursue anything. Why would you do that? Have a lawyer really look into the facts and be able to tell you, look, ma'am, I think, yes, you got some significant fault, but we can easily prove 51% or more on the defendant. So you do have a case to pursue.
So let's say that two drivers messed up in one crash and the injured passenger caught in the middle wonders if that helps or sinks him. So what happens when both the rideshare driver and another driver share the blame?
In my opinion, I think this is the perfect scenario. And the reason for that is the way I handle this is I tell the client, and then we obviously argue this with both at-fault drivers, I should say, insurance companies, is look, y'all fight over percentages. So we were just talking about comparative negligence percentages. Now this is this weird, different percentage. How much is each at-fault driver percentage-wise going to be blamed for the wreck? And so what I tell clients is, look, this is the best case scenario. Y'all figure it out. So defendants, insurance companies, y'all figure out how you want to share it. All I can tell you is my client's case is worth $1 million. And we need $1 million globally to resolve this entire case. We're not going to settle with one and leave another because I got to have you both involved, right? You don't ever want to do that because you're minimizing the value of your case. So you two defendants get together, figure out how y'all are splitting up the $1 million that's owed for my client's damages. So again, to me, it's, look, that's the perfect scenario, because now you don't have Uber or Lyft alone who's going, all right, Ted, it's $1 million case. We only have $1 million in coverage. That gives us more incentive to fight. Why? Because they'll look at it and go, hey, our worst day in court is we're going to owe $1 million. Why would I give it to Ted's client a year in advance when I always got a shot? The jury's only going to give them $900,000 and I save $100,000. Now you've got where they can argue with another insurance company to say, hey, we'll put up $750,000. You put up the other $250,000 and we can get this resolved with Mr. Spaulding's client. Now Uber, Lyft has saved $250,000 because they have another insurance company that is ponying up to split. So I think ultimately it can be the best case scenario, because as a plaintiff, you just get to go, look, I'm the one that's injured. You all argue with yourselves over who's what. This is what I need to get the case resolved because these are my damages.
So we just covered who you can name and how Georgia splits the blame among everyone at fault. But every one of those answers rests on the same foundation: the digital record of what the app was doing, and the evidence is sitting on the clock. A rider swears the driver had a passenger up front when they got hit, but all she's got is her own memory and nobody's taking her word for it. So how do you prove which insurance period was active at the moment of the crash?
That scenario is exactly what we want to avoid. So again, what I want people to take away, if nothing else from this podcast, is it's why you need to get with an attorney quickly. You do not want to be that person that doesn't have the evidence. So there's two areas here on Uber Lyft cases. One is the receipt of the ride that you purchased. or that the other person purchased, right? So if it's an Uber Lyft that you're not in, but it's an Uber Lyft that hits you in your personal vehicle, you have to request, because you don't have access to it, that customer's receipt information of here's proving they hired Uber Lyft at what time, where the ride was going. It gives you all that information. So that's evidence number one. Then evidence number two, the even more important evidence, is the app telemetric information that's in the Uber Lyft app. As you heard earlier from that really bizarre scenario where it was like a second before he hit, they will clock exactly when the ride was accepted. And then you time that up with the other facts of the wreck, when the wreck occurred, and testimony and that sort of thing. And that gives you everything you need. So it's the receipts to show, yes, they asked for a ride, the app information of he selected it, when he selected it, in combination with the accident report and any independent evidence of exactly when did their wreck occur. Those are the things you need to get. And again, if you're not in the scenario where you were in an Uber Lyft when the accident occurred, you don't control that first bit of evidence, which is the ticket I purchased the Uber Lyft ride. When that does happen, it's great, because I just go to the client and say, hey, you need to save and print off, screenshot in your app the information on this ride that you purchased it. It says who the driver is, all of that, so we can show that information. That's easy. It's when it's a third party, we got to go and get it, and you don't want that to go away. And it does. Within 30 days or more, it's gone out of the app. We can't get it.
So somebody snapped a screenshot of their ride receipt out of pure habit and has no idea that they're holding a key piece of the case. Why is the trip record one of the most important pieces of evidence?
And so in this scenario, we're talking about, first and foremost, our client is the one in the Uber Lyft that gets hit by an at-fault party. That ticket information is the first step to show you had purchased a ride, and therefore you were in that period, what I call period 3 scenario, where they were in the middle of a ride and the $1 million policy applies. You don't want to get into an argument over that. That ticket information is your first step. And so, yeah, if you take a screenshot of it, it's great, because again, at some point, we're going to lose that evidence. We can't get it a year later type thing. It's probably gone. Uber doesn't keep it. Lyft doesn't keep it. If you took a screenshot of it, it's sitting there in your phone and you don't even realize it, that you've got the initial proof that you had hired an Uber Lyft. Because what can they do? It's a maniacal kind of situation, but without the proof of it, they get to say, yeah, you were in the back of the vehicle, but how do we know this guy just didn't come pick you up for another company or no company at all, right? You got to prove that it was Uber Lyft customer, Uber Lyft ride that you were on at the time. Without that evidence, they get to just say, we have no record of it. We can't show that you actually hired this person for Uber. Because there are a lot of these drivers that do rides for Uber, for Lyft, and now some of these little tinier ones that exist out there. So at any given moment, they may be switching between Uber and Lyft and all these others. So you've got to be able to prove, first and foremost, which company is it, much less you were actively in there getting a ride by that company at the time.
So if it's been 3 weeks since the crash and a guy is lying awake wondering if the app data that proves his claim already got erased, how fast do you have to move before the rideshare company overwrites its app data?
Yeah, so it varies by company. I think 3 weeks, you're probably okay. What I like to err on the side of is 30 days. I just don't want to wait longer than that. Quite frankly, you should be okay even if it's after 30 days. But much like the insurance scenario over the years where it's been changing with these individual companies, their retention policies change because there's no Georgia statute that says, hey, Uber Lyft, you have to keep that data for X amount of period of time. So I don't want to assume things. I don't want to assume things are still the way they are, that they've got, for instance, a year retention policy and that sort of thing. I think I've seen that with at least Lyft in some of our cases, but you don't want to assume that it may change, right? especially as these guys are getting bigger and bigger and bigger. They're doing more and more rides. Now there's more and more data that costs money. They could change easily and say, hey, we're getting rid of this in 2 weeks. And you don't know when that change happens. Does it apply to you or not? So obviously, earlier the better. 3 weeks, you should be fine. 1 month, you should be fine. But I don't want to wait 1 month. I would prefer to be hired within days or a week or so of the wreck, so we can, at the very least, get all of our stuff out to force them to preserve this information. So could do another whole podcast on it, but there's Georgia statutes on when a lawyer sends a preservation letter, now they do have to retain it. But if you don't send that in time and they've already overridden it, then that statute doesn't help you. So again, it's why I keep saying, please get with a lawyer in any Uber Lyft wreck, because you just don't know. And you want to make sure you protect your rights to get all the evidence you can, so you don't have any arguments that this wasn't an Uber Lyft ride because you didn't get evidence preserved.
A witness swears the Lyft driver was thumbing at the app the second before impact, and that one detail might matter more than anyone realizes. Was the driver on the app when it happened? And does Georgia's hands-free act change the case?
So the answer is yes to both. Okay. So remember that really bizarre fact pattern that I gave you on a case that we had prior, where it came down to a second of what was he doing in the app. You could also get the scenario that it's not just that, where it's, did he hit the ride or not? He at least had the app on, right? So you at least had the 50,000 of coverage. But you could also imagine a scenario where it comes down to, was he literally turning it on or off a second right before the wreck occurred? What if he's driving around looking for a ride in the app and then decides, you know what, I'm just going to go home. And he, boom, turns off the app, and then bam, car wreck. Now you have no coverage. So now we're talking 0 to 1 million gap in insurance based off of that one fact pattern of, did he turn it on or off right before the wreck occurred? So the answer is yeah, it's massively important when it comes to coverage. What kind of coverages are available, when and what was he doing or she doing with the app at the time, on, off, and then of course, hit the ride button or didn't hit the ride button, all of those scenarios. And then the second part of your question is a yes too. It's real important, which is the hands-free law in Georgia. So this was passed years ago. Can't remember exactly when. I want to say it was like 2017 or something like that. You're not allowed to have any electronic device in your hands at the time. Now, in your hands doesn't mean just holding it, but in this kind of scenario, they typically use a hands-free device setup, right? So they have it on their dash or whatever, but they're having to go and touch it. So just touching it means you're not hands-free anymore. Why is that important? That is a Georgia law, all right? Rules of the road law. If you can prove at the time of the wreck, so meaning right at the time the crash occurs, he or she is touching that device, they're in violation of the hands-free law. And that allows what's called punitive damages, because it's almost like a DUI nowadays, because there's been so many wrecks because of people using these devices. Georgia has said, we got to put a stop to this. So we're increasing the penalties and things, meaning now we can pursue punitive damages like in a DUI case, because you're doing something really stupid at the time to distract you. And that's very valuable to a plaintiff, to have that hands-free law violation. So again, it's why, going back to your prior questions, it's so important to get all of the app telemetrics information, because some of them now, I was just dealing with an Amazon case, for example, and they have an app and everything that the Amazon drivers were supposed to use and have on at the time. They have information in there where they can tell whether they touched the button or touching the screen itself of their own phone at what time. So now you can easily prove, where normally it's so hard to prove whether they're using a device or not. You'd have to have witnesses and things say, yeah, I saw him with the phone in his hand at the time of the wreck. We can prove it electronically, and you can't dispute it at that point, right? So if you can get the app and it says at 5:23 p.m. and that's the time of your wreck, he's touching the device, that is huge evidence. And now you've got the hands-free law violation, punitive damages kicking in.
So, standing on the shoulder of the downtown connector with a crumpled bumper and a racing pulse, most folks have no idea what to grab first. So, what should you do immediately after a rideshare crash in Atlanta to protect your claim?
So beyond the typical, which applies whether it's Uber or Lyft or not, which is you want to get police report, you want to call the police out to get a report done to prove fault, you want to get treatment, those sorts of things. The big thing in these is what we talked about earlier, which is you want to secure any and all of the evidence that you can. So if you're in the Uber Lyft, you've got the direct evidence that you were on a ride at the time through Uber or Lyft, which is that ticket information. You want to get into the app, you want to screenshot it, download it as well, any and every way to preserve. Here's the ride that I hired Uber or Lyft for, because it'll give you time, where you're going, who the driver is, make of their vehicle, all the things to prove this is what it was. So it's really that simple. The difference with an Uber Lyft is you got to preserve that evidence when you have it in your control. So do it as quickly as you can. Obviously, you want to be safe first. You don't want to get yourself in a bind if you're on the side of the road, but within reason, get that stuff downloaded and saved, printed off.
So then a woman finally gets her official crash report and reads it top to bottom, and there's not one word about Uber anywhere on the page. How does the Georgia crash report handle a rideshare wreck, and why does it matter?
What you just described is exactly what the police report is always going to say. Every single time. I can't tell you how many times it will say nothing about Uber or Lyft because the police don't care. They're not going to ask those questions. It's just going to be standard like it normally is. It's going to give the driver's information. It's going to give their individual insurance because that's what's attached to the vehicle. The police can't even pull up that Uber Lyft insurance is applied because it doesn't go with the vehicle, right? It goes with the driver having to be in the app. So all the information, it's a ghost. Uber, Lyft doesn't exist. So how do you figure that out? Again, it's easy when our client's in the vehicle. It's harder when they're hit by an Uber or a Lyft driver. So going back to your earlier question, it would be one other thing to look at, which is anytime you're in a wreck, you don't know if it's an Uber or Lyft that hits you. You want to look for signs that they may have been driving for Uber Lyft. They have the little placards inside their vehicle and stuff like that. That's an indication that they may have been riding for Uber Lyft. For example, I've had several clients that were smart enough when they called me up to hire me, they mentioned that. They said, hey, I don't know if they were at the time, but I did notice that the driver that hit me had a big Uber sign in his front windshield. Are they riding for Uber? We don't know, but we'll find out. Because then I know to go to Uber Lyft and say, hey, we have suspicion that they may have been riding for Uber at the time. Please look into it. And again, they can quickly pull all the information they have, which then goes back to your other question. You don't want to wait a year to start doing this because if we miss that the driver was driving for Uber, we're missing all kinds of good insurance coverage. So this is a big issue nowadays because you don't know. So look for signs that this person may be an Uber Lyft driver. Again, you're not going to know unless they admit it that they were driving at the time. And we've had those scenarios where the person's very nice and they go, yes, I was, ma'am, I got a passenger in the back. I was riding for Uber. But sometimes they won't say anything and you don't know. So yeah, it's real important because those police reports, people think it might be on there. It's not. The officers are not required to figure that out. They're just required to get the information, VIN number, make, model, what insurance is on the vehicle. They pull all that up from DMV with their computers, plug it into the police report, and they're off and running. That's it.
So we have walked through the app data, the trip record, the crash report that together prove which period was live. With that evidence locked down, the last layer is what it's all worth, the damages, the hospital liens, and the right Georgia court, and then the deadline that quietly keeps running. So before signing anything, an injured passenger just wants a straight answer on what a rideshare case is actually supposed to pay for. What damages can you actually recover in an Atlanta rideshare accident claim?
So here is where an Uber Lyft accident is no different than any other wreck. You have all the available damages to you that you would, regardless of whether it was Uber or Lyft. And that's a good thing. So you have economic and non-economic damages. What are your economic damages? Economic damages are things that you had to pay for or physically lost money wise. So that is medical bills. And I always tell people it's past, present, future. You may not have all three of those, might only be past. You might still be treating. It's the current bills plus the past bills. And then you may be treating into the future, sometimes for the rest of your life. What is the future cost of all your medical? The next is lost wages. You may not have lost wages, and you may. If you've got them, past, present, future. Do you have all three categories or just past? Every single one's compensable. So those two items together. And then the third would be your catch-all category, which is any other out-of-pocket expenses. So think of things like it's not a medical bill, but you went out and had to buy crutches or a wheelchair, or you had to modify your home in a catastrophic case. I've had those where you're wheelchair bound and now you have to hire someone to make a ramp into your home and modify things for you to be able to live in a wheelchair. All of those are out of pocket expenses. So all of those categories, you might have some and not others. That's your economic damages. Then your non-economic damages, that's your pain and suffering. So that's your physical pain and suffering, mental pain and suffering, any inconvenience, any emotional damage. That category is what's called your non-economic damages. So then both economic and non-economic combined is the value of your case. It's literally that simple and that complicated, all in the same sentence, if you will.
Grady's billing office keeps calling a man while his claim is still wide open and the bills are stacking up on the kitchen table. If an Atlanta trauma hospital treats you, how do the bills and liens get paid while the claim is pending?
So we could do a whole podcast on this. This is a topic that drives me insane. I'm going to give as much as I can information because yes, it is a big issue at the beginning that people don't realize and understand. And some of that's because of fraud, quite honestly. People think that the other side, the at-fault party's insurance, is going to pay their medical bills as they go along. No, they are not. What I tell people is this is a reimbursement system when it comes to medical. By Georgia law, you're the victim, but you're required to figure out how to pay for your medical treatment. The other side doesn't do it for you. And they don't want to, right? Because they don't want to help you with your case. So you got to figure it out. So first and foremost, you want and need and must use your health insurance to pay for everything, including a Grady bill like the one you're talking about. And here's where the fraud kicks in. Not Grady itself. I've had other hospitals, I've had to actually almost get into litigation over it, scamming personal injury victims, coming in on a stretcher, finding out it's a car wreck and telling people, we can't take health insurance. Or even worse, we don't take your health insurance when it's a car wreck. Why are they doing that? Gets to the further point of your question, because they don't want to accept health insurance because they'll get paid less. They'll get paid what the health insurance company is willing to pay. They want to get their full bill paid. How do they do that? They know they can't get it from you directly. You're not going to have 10 grand in your pocket to pay them. There's something called a hospital lien in Georgia. It's a Georgia statute. Hospitals can file it. That's why it's called a hospital lien. Within 72 days of discharge, they can file a hospital lien for the full amount of their bill, and it attaches to your personal injury case. I then, as your lawyer, cannot give you a dime of a settlement or verdict until that hospital lien is taken care of. They want to do that. That's why then these hospitals sometimes that I've actually experienced with clients tell people, we can't take health insurance because the moment you build the health insurance, they can't file hospital lien. They want to file the hospital lien because it attaches to your case and they know it binds the personal injury attorney to have to deal with that money. So a $10,000 bill, hey, Ted, great, your client settled, awesome, or got a verdict. Hey, we got a hospital lien, here it is. Go ahead and cut us a check out of their money for 10 grand. When health insurance would have paid $1,000 and they would have had to have written off the rest of it. So my client gets injured by it because they have to pay $10,000 out of it instead of what health insurance would have paid, which is $1,000. So it's a real nasty situation. It's gotten better. I won't get into a lot of the details, but Georgia has revised the hospital lien statute to cover this issue. Thank God someone got to the legislator and told them the scams that were going on. And so now it's harder for hospitals to pull the wool over personal injury victims' rights with health insurance, but it still is an issue out there, especially when the public still thinks, oh, yeah, the other side's paying for all of it. Yeah, but it's at the end. It's not at the beginning. Because you could go 2 years and you got a $10,000 bill, like you said, sitting on your kitchen table because you do owe it legally, right? You're the one that asked for the services. The hospital gave it to you. You owe the 10 grand. Don't let it sit on your table. Get with your health insurance company. Health insurance needs to pay it. One other quick thing for people, you've got to bill it to your health insurance, send it to them within 180 days of discharge. Or then health insurance gets to say, hey, it's too late. So don't wait. So it's another thing that's kind of urgent. I go through all of this with my clients first day that we're talking because I know how important it is for them and their bottom line at the end to make sure, hey, did they tell you any of this stuff? If they didn't, great. Hey, double check that health insurance actually does get paid within that 180 or billed within that 100-day window because you got to get them to cover it. Saves you a lot of money.
If a rideshare case ever turned into a real lawsuit, one listener wants to know which Atlanta courthouse it would even land in. So, which Atlanta area court would actually hear a rideshare injury case?
Yeah, so it would be one of several. It's your local court. Typically, we do it in state court. You can do it in state and superior court in the county where venue is. Okay. So in Atlanta, and venue is based off of, first and foremost, the defendant, so the at-fault party where they live. So if you're in a wreck in Metro Atlanta, strange enough, may not be in Metro Atlanta that you can file the lawsuit. Typically it is. That person probably lives in the Metro Atlanta area. So obviously biggest one, because it's a big county, is Fulton County. So Fulton County State Superior. The next biggest one in the area is DeKalb, Clayton. You could do Cobb County, a little bit further out, but still considered Metro Atlanta. So it could be one of those 13 counties that are considered Metro Atlanta, one of their state or superior courts, if you have venue. Again, this is another reason why you want an attorney involved, because venue can significantly change the value of cases. A case in Fulton County has a different value than a case in DeKalb County. DeKalb and Clayton are pretty close to each other. There's probably, I would argue, the two best venues to have a personal injury case. Increases the value of your case. But then you go out to places like my home county of Forsyth County, your value's dropping because verdicts aren't as high out there in Forsyth County. So it is a big question and a big thing that you need to know. What county are you dealing with? What local Metro Atlanta area? Most likely you're talking Fulton.
Life gets busy, months slip by after a wreck, and let's say a woman suddenly panics that she may have already run out the clock. So, what is the deadline to file a rideshare accident claim under Georgia law?
The answer is this is yet another area where Uber, Lyft wrecks are no different than any other. It's 2 years for personal injury. Okay. So property damage, remember, is 4 years. So if you're in your own vehicle getting hit by an Uber, Lyft, property damage, you got 4 years to file a lawsuit or you forever lose your rights. So get it resolved or file a lawsuit. Personal injury is 2 years. So it's no different Uber, Lyft than any other car wreck case. So you get the full 2 years to file a lawsuit before you lose your rights.
So, that is the full picture on damages, hospital liens, the venue, and the 2 year deadline that closes the door on an Atlanta rideshare case. So, Ted, before we close, give the person listening right now one piece of advice they can act on today after an Uber or Lyft wreck.
Very simple. And it sounds like a sales pitch, but I promise you it's not. Contact an attorney. It is free. There's no obligation to hire them. But please, because of everything you've heard today, there are so many intricate things from insurance to evidence to hospital liens that are time sensitive and hard for people on their own to navigate that can severely affect the value and the compensation that you have a right to. So reach out soon to a lawyer like myself that can talk about your case, give you some of this advice. You can make an informed decision whether to hire them or not. And of course, if you want to contact me, would love to talk to you. really two ways to do it. One, you can email me. It's tspaulding@spauldingfirm.com. The other is call us directly. I love to talk to people. Happy to have that free consultation. That's 470-695-9950.
If you or a family member was hurt in an Uber or Lyft accident in Atlanta or anywhere across Georgia, call Spaulding Law. Again, that number is 470-695-9950 or visit spauldinginjurylaw.com to talk to Ted Spaulding directly. The consultation is free. Thank you for listening to Atlanta Car Accident Attorneys with Ted Spaulding. We will see you on the next episode.